People are asking me all the time about these Fed rate cuts that you're hearing about. One of the questions is, what does it really mean for mortgage rates? And two, should I wait if I'm thinking about buying? So let's talk about that. So first you have to realize that the Fed is really setting the short-term rates. These are the rates that the federal government is loaning money to banks. And so what it's directly affecting is things like the interest on your credit card or the interest on a HELOC loan. Mortgage rates, on the other hand, are tied to the 10-year Treasury rate. And what happens in periods of uncertainty, people flock to the known. And if the economic conditions are a little bit unstable, they want a safe investment, which are bonds. And the more secure the bond market is, the lower the rates are. So looking ahead, what the Fed is saying is they are predicting that they're going to have maybe another 1 or 2 rate cuts by the end of the year. However, the bond market is already anticipating that, and that is why the interest rates have already dropped, because they're anticipating these Fed rate cuts. So what's going to happen is this fall, this winter, if we get another rate cut, I don't actually expect those mortgage rates to drop that much at all, because they're already expecting it. So anyway, with knowing all of that, what I am telling buyers today is get into a good financial position. Check your credit score, get pre-approved, start looking at houses. And then when you find a house that you love and it works well for your personal situation, the finances make sense, it's at a monthly payment you can afford, go ahead and put an offer on the house. Lock it in. Because here's what I think is going to happen. If those rates do continue to drop, this spring we could get into a bidding war again, and those prices could continue to go up. I would rather you get into a situation that you get in a house that you can afford, and if the rates drop, you simply refinance. It's pretty cheap, like $2,000, as opposed to waiting for a year and find out that that home has gone up 5%, which could cost you an additional $10,000 or $15,000. So long story short, don't worry so much about the news, get your finances in order. When you find the right house, put an offer on it, and if those rates do drop, just refinance.